Hello and welcome to Newsmax TV, Money News on Newsmax TV. I'm John Bachman. Joining us right now from London is Dr. Peter Warburton. He is the Managing Director of Economic Perspectives, a UK-based consulting firm. And Dr. Warburton, it's great to have you back with us.
Great to be here.
All right, so let's talk about news coming out of the Fed this week. They announced they're going to start tapering their stimulus program, but not by very much, just about $10 billion every month. Well, might seem like a bunch to some folks out there, but not to the stock markets. The markets reacted very favorably here in the United States. So what was the reaction over there in the UK?
Yeah, I think a bit more muted, but still, I think there's a sense of relief that, if you like, the course that the Fed appeared to set much earlier in the year, that it's actually stepped onto that path. Back in September, there were high expectations that the Fed would taper then, and it pulled away and cited all kinds of reasons for doing that. So I guess this time people were not at all convinced that the Fed would be ready to take that decision, and I had a sense of relief that they feel the economy is going well enough to make the taper begin straight away.
And what is this all going to mean? Is this going to have much of an impact on, the currencies, the pound sterling versus the U.S. dollar, also the U.S. dollar versus the yuan out of China and the yen from Japan?
Yeah, I think, and the way that a lot of people read it is that what the taper will do is reinforce the upward track of U.S. Treasury yields, and that could give further support to the dollar. The other reason that people think that way generally is that they see money flowing out of funds, emerging market funds, particularly debt funds. The taper, in a sense, kind of reduces the amount of liquidity flowing to the emerging markets. That's the general thinking. And again, that would support a stronger dollar. I'm not so sure about whether that's going to be the deciding mechanism. So I'm a bit more skeptical. I think the dollar outlook is more neutral. Obviously, dollar has given back a bit of strength since the summer. So I think that there's certainly quite a bit of doubt. So I think for choice, what I would see sterling holding pretty level with the US dollar. It's been trading between 160, 165 pretty consistently through this period. The yuan is still on an appreciating track of about 2 to 3% a year against the dollar. So I don't see anything to disturb that immediately. And so that basically leaves the yen. The yen has reached about 103 against the dollar at its weakest. And I think probably 110 is about the limit of where I would see that going. But that's more a yen story than a dollar story.
All right, so not a huge impact there from this announcement in terms of currency. Let's also talk about something that hasn't really been in the headlines a ton, but you say might start rearing its ugly head again in 2014, and that's some of these countries in Europe that have had very difficult time with debt. We're talking about Spain, in Portugal, in Greece. We haven't heard much about the debt situation there. What do you see happening with those countries in 2014?
Yeah, the situation has been put on ice for much of this year. Clearly, we had German federal elections in September, and it's only really in the last week or so that we've had the resolution of that in terms of a coalition government having been put together. So basically, all of this time, it's as though Germany, the largest member of the Eurozone, has not wanted to confront the issues in places like Spain and Portugal. They've been turned inwards, trying to get their own house, their own government together, and obviously putting a coalition together pretty much of centre, right and left. Clearly there's been a huge amount of compromise that's been necessary in order to reach that. But what it has done really, is, I say, is to give a kind of a much longer stay of execution, if you like, for places like Greece. The latest figures out of Greece were terrible. The economic growth rate was down about -2, -3. Prices are falling. There's no way they can meet the requirements of their rescue packages as things stand. They definitely need, an extended rescue package. So the issues haven't gone away. And for Spain and Italy, they've hung on to lower bond yields, and obviously that's helped to stabilize their economies a little bit. But my sense really is that we're going to be throwing the this kind of stable period out of the window pretty soon. Basically, there's a new review of European banks called the Asset Quality Review. That will use end-year values from balance sheets. It probably won't start to be hitting the headlines until after April, but it will contain all kinds of very worrying news about the condition of bank balance sheets in places like Spain and Italy and Portugal, but also obviously the assets which are carried by French and German banks as well. So I think these fundamental issues have just been set to one side for a number of months. I think we'll hear a lot more about the ECB's response. Inflation figures in Europe have fallen away to less than 1%. The ECB, I think, is coming under increasing pressure to provide some more stimulus and try and head off another round of crisis coming out of these countries.
Well, it's certainly something to keep in mind and pay attention to this spring, is that report that'll test some of these European banks. And it sounds like there's a lot more turbulence down the road. Peter Warburton, Managing Director of Economic Perspectives, thanks so much for being with us. We'll check back with you soon.
Thanks, John.
And thanks for watching Money News on Newsmax TV.